Thanks for joining us at XM.com. This is the Weekly Outlook. I'm Christina Marujos. With me today is Senior Investment Analyst Marios Eftikiriakos. Marios, it looks like it's going to be a relatively quiet week, but we do have some events coming up in the United States which will be appealing to investors. But first of all, let's have a look at the U.S. dollar, as U.S. inflation for January came in pretty hot again, and yet the greenback hasn't really reacted. Why is that?
Well, hello, Christina. I think everyone is really trying to figure that out. So, let's take a step back. What did we see yesterday? US inflation came in hot, right? The bond market priced in one extra rate increase for the year. So we went from 5.5 rate increases for the year to 6.5 rate increases. And yet, that didn't really translate into the Forex market, right? Yes, the dollar moved higher eventually, but it was a very delayed reaction, and it wasn't particularly impressive, to be honest with you, considering the magnitude of the move in the bond market. Now, there are several ways to interpret this lethargic move, let's say. For instance, a lot of the big players might have been positioned for a hot print, or maybe several traders sense that inflation is very close to peaking. Or perhaps it could be that a lot of people are betting, yes, the Fed is going to raise interest rates as a response, but that will backfire and could cause a recession in the economy. So there are several ways to look at it. I don't think the reason is really important. What matters is the price action. And the price action is speaking very loudly. In recent weeks, we have seen a very consistent pattern. The dollar receives good news, it can't really rally. Now that, to me, suggests that the uptrend that we've seen over the last year or so, it's approaching, it's coming to an end, essentially. So let me lay it out, the argument. Now, the Fed is almost fully priced by now, right? So the markets, in fact, might have gone a little bit too far. We're pricing 6.5 rate increases for the year. There's all sorts of speculation that they might call an emergency meeting before March. The probability for a double rate increase in March has gone through the roof. So it's a very, the markets have really gotten a little bit ahead of themselves. Now, there are some good arguments as to why we might see this pricing deflate in the coming months. So first of all, inflation might actually peak very soon, the yearly rate of inflation. So we've got an environment where government spending, which really did the heavy lifting last year, that's fading, right? Supply chains are slowly coming back online. Consumers might start shifting back to services now that the restrictions are being lifted. And from March onwards, we're going to have very tough year-over-year comparisons. So that is going to help bring down the yearly inflation rate mechanically, right? And we also have politics. So the Democrats are probably going to lose Congress in November. Now that means the days of extravagant government spending are probably coming to an end, and peak growth might also be behind us. And the final argument is the Fed is not playing solo anymore, right? We've got a situation where the European Central Bank is starting to turn hawkish to signal rate increases, so the dollar's interest rate advantage is unlikely to get any bigger. So combining everything together, I think that the dollar might have, let's say, one last hurrah left. So we might see a little bit more. We might see the dollar gaining a little bit more in the near term as the markets start to speculate about a double rate increase in March. But I think that the overall rally, it's on its last legs. It's just difficult for me to see a ton of upside with the Fed already priced as aggressively as it is.
And now let's turn to this upcoming week's events. Markets will be eyeing the latest Fed minutes out on Wednesday, as well as the retail sales print for January out on the same day. What should investors expect?
Well, not much, honestly. So the minutes are already outdated, but a lot has happened since then. So I doubt we are going to get any crucial signals from the minutes. Instead, it's retail sales that are the important release next week. They're going to show us how the consumer is holding up. We had a disappointment last month. Is consumption going to rebound? But I think that the really crucial signal is going to be how the dollar reacts to these releases. So, for example, if we get a strong retail sales report and the dollar doesn't really rally as a response, similar to what we saw with inflation, that would be another argument that the overall rally is approaching its end.
Marius, thank you for joining me today. This was the Weekly Outlook here at xm.com.